Hello, thank you for staying tuned to my page where we simplify the practice of quantity surveying. Uh, Welcome to another episode where we shall be learning how to keep a payment record and also use the same record to prepare interest on delay payment if the client has defaulted. Before we proceed, I want to request that if you have been my followers for some time or you're watching my video for the very first time and you are yet to subscribe to my channel, please hit the subscription button as you watch this episode. This is the only way we can get feedback from you that our content is being appreciated and it's adding to knowledge out there. Having said that, uh, as you can see on my screen, it is a table that I have prepared where you keep your record in such a way that it is clear for whoever that is interpreting this document. And uh, for the purpose of learning, I have I have illustrated how the formulas in each of the cell is derived via what you're seeing on this rule. As you can see, uh, column D is numbered as 1, while column E is numbered as 2, F is 3. Then for column G uh, is numbered as 4, but the formula in the cell of 4 is gotten from you multiplying uh, uh, column 3 by 5%, which makes up the retention, while column H, which is numbered as 5, for you to get the formula that it's in the cell, is for you now to multiply the figure in column 3 by 15%. Then for you now to get the formula in column I, which is numbered as C, is for you now to less 4 and 5 from 3. So this is how the formula is gotten till you get to the end. Now, having understood how the formulas are derived, before I explain further the chart on my screen, in every contract there are conditions that guides payment. How when the process for payment should start and when it should end, meaning when is expected the both party to go to site to assess the progress of work done, and the time is expected of them to compute this assessment and agree on what the figure should be. Then the the contractor will submit an interim payment request, which in turn the client will go through and see if his computations are okay. Then he will now certify it for payment, and if the computations are not okay, he will certify what he feels is okay and now return back to the client for invoicing. So if mind us, it is always there are always differences when the both parties are not either working together, that is where you often see a wider gap between the request for payment submitted by the contractor and that the one that the client has certified. But if the assessment is done jointly and the computation is done and agreed, jointly and agreed, or they both have done individually and they came together and go through the numbers and agree what is correct, the differentials will not be more. So also in the condition, there are uh, there are clauses that stipulate the number of days that the request for payment should be with the client on or before he pays. It shouldn't be beyond a certain number of weeks after receiving the invoice of the contractor. So it could be 2 weeks, on or before 2 weeks, or it could be 3 weeks, depending on what the condition stipulate. And also, there are other conditions that guide should, in case the contractor the client's delay in paying, what will be the penalty that will be applicable in such instance. And in the context of Nigeria, it's always referred to the NIBOR rate, which is gotten from the central bank's website. And how this rate is being computed is some, say, A-list banks in the country will submit their interest rate. Then it is upon those rates that the central bank will knock off the two most highest and now average the remaining one, and that average of those remaining interest rate from other banks will now become a reference point for to be applied in such instance. But the condition will not just stipulate that that rate should be. That rate will be what you will add whatever the clause, the condition has applied. Sometimes the condition will set 4%, 2%, 3%, 1% plus the NIBOR rate. Meaning, if in the website of the CBN website, say it is a 27%, it's a 30%. It is now 30 plus the 2% that the contract has stipulated that it should be added to what it's on the website of the central bank. So then that clause, you know why that clause is there, is to checkmate the excesses of the client as well, so as not to delay in paying, because there is no free money anywhere. It's assumed that the contractor is borrowing money and is borrowing this money with an interest. And if this delay, the client delays in paying, it will be affecting him also from his lenders. So whatever losses he is going to incur as a result of that delay, the client should be the person that will bear the burden. So that is the essence of it. So having said this, as you can see, I have in my first column, I have the list of certificates I have put in since the beginning of the project to the time I am preparing the interest for the months in view. I had received an advance payment in November 17, and just like we know this, all the figures on this sheets are all assumed figure, because we are not on a site where I am using facts from particular project to prepare this document. So my assumption is that the project is a 5 billion naira project, and in the contract condition, it is stipulated that I am upon submission or submission of a bank guarantee, is expected that the client should give me 15% of advance, give me 15% advance, which amounts to 750,000. That is why you see in my payment schedule, the first payment I received from the client is 750 million naira. And the second, because it is an advance payment, retention will not be deducted from it, amortization will not be deducted from it. The same 750 as net, because it is the total figure that was given to me. Then for the second payment, which was for the month of January, the works done in January, we actually went to site at the end of January, which is 31st of January, to assess, to do all the assessment for the job work done. Then between January 31st and the 5th of January, we had reconciled, we have checked all the figures. I have submitted an interim payment certificate, and the client has returned a payment, in entering payment request. Then he has returned a certificate for me for payment. And on the 5th of February, I had already attached my invoice, and I have submitted a 400. I have submitted a 344 million for payment after all the deductibles. The 400 is the gross, excluding VAT. Retention, which the contract stipulates that is 5%, have been deducted. Amortization, which is the 15% of every work done, has been deducted. This is the net after deduction of the both. Then I added VAT, which is a 7.5%. So I now have a 344 million that I'm supposed to be paid. Then the date that is due, that I am due for this payment, is the constitution said 2 weeks after submission of my invoice, I am supposed to be paid. So if you add 14 days, to 5th of February, you'll be at 19th of February. So I am due to be paid this day, and I was actually paid on the 19th. So as you can see, there are no delay, and that is why you see 0 here. Then for the second payment, it was for the month of February, and I submitted my invoice for payment on the 7th. Between 28th and 7th were the times we had gone back and forth with the client. I submitted entering payment and all of that. He's giving me a certificate for me to invoice, and the gross figure is 350. I deducted all the retentions and all of that. Mind us, these figures, this analysis, you are getting these figures from the certified, that is the certificate from the client. But if the figures are the same with what you have presented, you can as well get your figures from your own entry certificate. But it's always very good for you to analyze the certificate of the client, because sometimes for you to know if there are errors or there are no errors. So I'm getting these figures from the client. Then I now added VAT. I have 301 million to claim from the client. And if I add 2 weeks to the day I submitted, I'm supposed to be paid 21st of March. And eventually I was paid on the 30th of March. There's a 9-day delay. So also the same thing for payment certificate 3. I submitted my invoice for payment on the 4th of April. It was a 500 million gross. After deduction of retention, amortization, and added VAT, I have 430 to claim. And my due date for payment is is 18th of April, but I was paid on the 27th of May. So there's a 39 days delay. And coming to the end, why you are supposed to have these two columns, usually sometimes you will file in for payments for, say, filing for payment of 301 million, 1 million. But the client may be due to lack of funds in the account, you are paid, say, 300 million. So there'll be a balance of 1 million that they are owing you. Like in this case, these are all scenarios. Sometimes you can be overpaid, which means you are owing the client it's overpaid you. But in this scenario, we are putting it as to, okay, you are requesting for, it was a 430 million you're supposed to be paid. You are now paid 400 million. So there's a 30 million remaining. So with this analysis, you can now either send this, with this analysis, you can put up a mail, attach this detailed analysis, and send to the client, telling them that you've been short paid. You've been short paid in valuation 3 and 4, and they will look through it and see if actually it is their fault. If there are no reasons for doing that, you'll be a check of 31 million will be given to you. Or if this case lingered till the final account stage, at a glance you know what was paid via check, because this is the amount you got in the check that was issued to you. This is what you are now putting in this column. In this column, this is so this is the amount in the check is what you are computing here. So at the end of the, say, when you're preparing your final account, you know what was paid to you through check or through transfer, whichever means, because you are relating with your finance department. Because of course, if you are a site or a project QS, the money is of course not paid to the site, it's paid to your corporate office. And the corporate office, at every time they receive payment for that site, they send a mail to the project manager, maybe copy the project quantity surveyor, and telling them that they've received payment from the client in the tune of this amount. Then you use it to prepare. So at the end of the day, this tool will help you to know what you've been paid to the end of the project. Then you will now, when you're preparing your final account, you know what is remaining as balance to be paid to you, or you are to refund amount of money to the client. So having explained how this table works, and we have seen that it's amongst in the 4 valuations you have prepared, you had 2 that they delayed in paying. The first was paid at the right time, and the last one was paid at the right time. But the 2 February and March, February and March was paid late. So now you have the next sheets. The next sheet, the only thing that will come to this next sheet will be the important dates and the figures. That is the date you submitted your invoice for payment, the date that is due, that you are due for payment, and the actual date that you were paid. Those 3 dates are the dates that will come, and the amount that you were due to be paid in that month. Those are the figures that will come. Then, like I did told us, the CBN, the Nigeria Interbank offer rates, which is the NIBOR rates, we are assuming now in this case is 27%. And in the contract says NIBOR plus 4%. So NIBOR plus 4 gives you 31. And that is what you see I have added here to have 31. So if, say, in February, it changes, say in February it has either gone down or it has gone up. So you copy this one and permanent that of January, because in January it was 27. Say if in February it now goes to 28. So February will now be 32. So it fluctuates. It's not something that is static all through the project. So as every month you go to the website to check if it is still the same or it has changed. So you apply whatever you see on the website in the month you are claiming for. So as you can see, so like I said, I have this giving me 31. So I linked the date from my certificate analysis. I linked them. I brought the date for I submitted my valuation, the due date, and this. So I computed the due date and the date that I was supposed to be paid. It gives me my 9 and 39, which is the 2 days that they had delay in paying. Then what the formula, like I did in the first sheet, also I did here, I have my columns named 1, 2, 3, 4. Then how did I compute this? It is 5 is equals to 4 minus 3 gives me this. Why 6? 6 is the amount that I'm due for payment, the amount I am due for payment, or the amount I am paid. But the amount I am due, because the interest is on that total figure that I'm supposed to be paid. So you put in the figure, less figure you are paid. It could be okay. It could be because I think the figure here should be the exact amount that I was paid, and that is what you see, total amount paid, instead of the net amount after taxes that I'm supposed to be paid and all of that. So I have the figure here. So the formula now to compute my interest is now the number of days that I'm delayed, divide by 360, multiply by the figure that I am entitled to earn, multiply by 31%, gives me the interest that is accrued to the monies that I am paid. So this is the amount that I am due. So once you have this sheet, you send it to the client. You tell the client you violated the contract. Your letter will capture those clauses that they are in violation, they are violated, and all of that. You refer them to the clause, and you attach this document to them. They will check and see if actually they are in violation. They will pay you this amount of money. Though this money in the face value look as if it is the money, it is your money, but in actual sense, it's not your money because there is no free money anywhere. You actually borrowed the money from bank for business, and the bank is charging you interest on that money for the number of days, months, years it remains with you. So if the client is not paying this, it is from your profit or from the monies you are making as profit that you are going to pay your financier this amount of money that you are owing them. So you can see that if you have this record going with you, just imagine you as a quantity surveyor working under a project manager, and he requests that you should send him your certificate analysis summary and and you send him this well prepared document. There's no way he will not appreciate your expertise and see you as somebody that knows what he's doing. So if this has added to your understanding on how to keep your record, and also how to prepare interest on delay payment, please do share and like my page. Above all, if you have not subscribed, please hit the subscription button to keep us going. Thank you. See you next in the next episode.